So overall, it's what about you and I talked about. So what we're seeing mostly is the first three tiers are where predominantly the women are focused, right? So anything from insurance, cash, stocks and bonds. It's when it gets into that speculative area, right? So the bottom, I think that's the bottom part of the
I can put it up.
Yeah, or the top. Yeah. And the top one is where no one except for myself is actually doing anything. So, yeah. And that, of course, is what everybody would like to hear more about, is that speculative area. It's more, and it's also about, I think, the lack of understanding and getting comfortable with the risk associated with it, because it's seen as volatile, right? So somewhat tumultuous in that speculative area.
Got it. Was crypto the big one?
Yeah, I think so. Crypto, NFT,
Okay.
those areas. Although, and I shouldn't say on the speculative, crypto is the big area and NFTs is the big area, because we do have people that, of course, are investing in land. And I think collectibles. So nothing on the startups except for myself, and nothing on the NFT and crypto except for myself. Although we do have someone who does help to raise money for startups, right? Which is interesting. But
Cool.
okay.
Okay, who wants to go next? Baat, do you want to go next? Or
We had Rosemary lead our group.
Yeah, what I thought was most interesting was investing in our children, and that struck me, and now I can't get that out of my head. But when we pay for our kids' colleges and their futures and so forth, that's a really big return on investment that I think we don't often monetize very well. But that's an important one, I think. We had some people interested in crypto. Not a heavy investment already, not much experience in that area. Land, I own some speculative land. Some had mutual funds and stocks. There's a lot of change in the environment. One of the stocks that I've been super impressed with, and just the stock tip for everybody maybe, but don't hold me to it, is CF Industries. They are a fertilizer manufacturer. And over the past, maybe I've held it for maybe 2 or 3 years. Over the past couple of years, it's returned 176% on that investment. And right now, because about a third of the world's fertilizer comes from Ukraine, obviously that's going to make the demand not only higher, but drive prices up over the next period. So, the other thing is I have a managed portfolio, and we talked about this a little bit, that hello, somebody's anyway, a managed portfolio, and my stockbroker just told me he thought we should get out of high tech stocks for the near future, because it doesn't look like they're going to do well for the next 2 or 3 years. So I moved some money out of those investments into others.
Well, there was one more group, right?
Yeah, I don't even know. So Beth, how many groups were there?
There were 3 groups, and so the other group had Karen, Toya, Sandy, and Virginia.
Yeah, Sandy, why don't you go?
Okay, sure. We had kind of a diverse range. A lot of it was in the safer investment areas for, I would say, most of everybody in the group, with government bonds, definitely the treasury bills and stocks, real estate. Personally, I have invested in myself, so that was a lot of money in the startup area. And I actually look when I invest in any kind of stocks to make sure that the company is actually good for the environment or for the world. So for instance, I won't invest in Exxon or any of these big polluters. I also think that gold has been a good investment for me. And we were really talking about, we had 3 questions. Everybody also was talking about real estate, that was a good investment, particularly at this time for selling real estate. But the market is so volatile when it comes to either stocks or real estate. So one of our questions was, in terms of the longevity, what the recommendation would be and how they really differ in an investment portfolio. Insurance kind of came up, especially from my view, that I didn't think it was really good place to invest any money, but as of recently, I'm sort of changing the tune, especially when it comes to long-term care insurance and things like that. And then we were also wondering about capital gains. When you do sell real estate or when you have something else in your portfolio that you're selling, how to best reduce capital gains tax, and then also inheritance tax in those areas. Did I cover everything, group?
Yes, you did an outstanding job, Sandy.
Yes, yes.
What do you guys think about the real estate market? Baat, what do you think's going on there?
I'm deep in it right now. I'm literally in the middle of a transaction of selling something in California and buying a replacement in Colorado. It is a crazy market. I'll tell you, there's not going to be any like speculation, I think, that I want to do. But if you look at graphs right now, they remind you of the Tesla graph a little bit, kind of even the last 6 months. I don't know if anyone's looked at the Tesla graph that just goes vertical. It feels like real estate is there. And I'll tell you, I'm purchasing something and I feel like I'm purchasing at the height of the high. I know that there's a lot of conversation right now around investors making, what was it I heard? 1 out of every 5 transactions are from investors, and 28% of the transactions are done in cash, probably by these investors. And that's driving a lot of the difficulty to purchase, housing rather than investments. That's kind of a layout of what I heard now about real estate. That being said, I don't know where it's going to go. Everyone says it's been in a bubble for a very long time. And you never, I'm not the one to predict bubbles. But what I'd love to do is actually take us back a little bit. And Maria and I kind of wanted to level set a conversation that is a bit more grounded, I think, around how we look at our what we call financial freedom, but the reality is financial freedom is a new word for retirement. If you think about it, most of the people on this call, like it's a guess around age, y'all look wonderful, but I'm assuming we're at a bit of a later stage of our careers. We're brought up in a world where we're told, study in your 20s, work till you're 60, put your head down, save. And then at 65, you'll wake up and there's going to be an RV in your driveway and you're going to stop working and you're going to retire. And there's going to be passive income coming out of somewhere. I think this is the promise, at least my generation was kind of brought up with. And the new generation is waking up to a new reality. Just a few kind of statistics so you guys get a sense of why. In the 70s, the 401ks were created because, pension plans were starting to go away and employers took over. And in 1980, the average matching was close to 100% by employers. And today, the average matching is around 5%. So employers are pulling away from sort of owning your retirement. Similarly, Social Security for everyone who's following is not looking good for our kids' generation for sure, and for us is still iffy. I'll just frame us. I have kids at a 17-year-old, a 14-year-old, and an 11-year-old. So you get a sense of where I'm coming from. And so financial freedom is not really, hey, I want to sit with a margarita at the beach and stop working when I'm 20. It's this new understanding that we need to, at some point, very early in our in our journey, to move from active income, which is our work, to some sort of passive income. And it's not going to be a straight line. There's not going to be an age at 65 that this happens. It's probably going to be a gradual thing. And it sounds like everyone on the call is already, all those who started businesses, invested in themselves. I love that approach. Are thinking exactly that, are understanding that we're going to be working a lot longer than the promise. And so how does life look like? And I know that historically, or not historically, the majority of the people, we start our career, we work, we save, we create a pile of money. Usually there's not necessarily a plan around it. It's a pile of money. Maybe it's for a house, maybe it's for something, but there isn't as much focus on what happens in the future, that moment where you need to start having passive income. And how do we move from active to passive income? So we wanted to talk about this journey, Maria and I, and share a little bit about our thoughts. And I'm like, Maria, I'll have you jump in, and then I'm happy to share how I started my journey towards understanding how does passive income look like.
Yeah, and I don't know if anybody else on the phone is like me. I was raised, I am the second generation American. So my family is all from Europe. My parents were raised very European. And all that basically means is, and I should say more importantly, Italian, where the woman's job was to get married and have children, and the husband went off and was the one who was working. Some of my family members were working in more trade type roles, and my father was one who pursued business. But, again, where the woman didn't even really think about it, was just much more in the way that I would describe it, transactional. She takes care of the now, the present, make sure that the family is fed and the roof over their heads was clean, and that was it. I was the first that actually graduated from college, and I fought my family to actually pursue a career to go after a career. So there was always this back and forth between myself and actually my grandparents, where they thought I should be home taking care of the family until I went off to get married, which, by the way, I did when I was very young. Just the way that I look at it now is we all are products of our environment. Whatever we chose to do, decided to do, what we're comfortable with doing is what, in our roots was our foundation. So I have always been the person that was bucking against the proverbial system, right? So the way that I look at me is my parents told me no, I went off and I did it. I also ended up getting married at 21, had a child at 22, was divorced by the time I was 23. And I found myself with a child, with this new, this baby, but also this world in front of me, where I very much wanted to participate as somebody who was active, pursuing a career, and not just any career. I wanted to be the best of the best because, again, I was being told no. And then you find yourself where you're successful at the things that you're doing, but how are you going to take that success and let that success continue to pay for you? So I wasn't even thinking in those terms. I was more so thinking survival mode. I needed to take care of my daughter, and there was me. And, I was in a world where men were basically the drivers and in the driver's seat. But thankfully, I pursued a career where it was more men. So when I was in the room, I was listening to their conversation. I'm an unbelievable listener. I can hear probably 3 rooms over, right? So I was taking it all in, and I'm hearing about their investments, the things that they're doing, and I'm saying, well, gee, if they can do it, why can't I? Because remember, I'm bucking the system. So I kind of fell into everything that I decided to do, whether it was a startup, which I did very young. I was a co-founder with another gentleman for a company where we actually had Sandy Wheel and Michael Dell as our investor. So Sandy was the founder of Citi Group, and Michael, of course, we know, for Dell products. And I'm sitting in this room as a very young woman who was young, and I say young and dumb and naive. And I ended up being one of the strongest contributors in the way that I was looking at everything, because I always used intuition to drive me. So I guess for me, again, everything that I've done, and as I'm sitting here and talking about my own experience, I want everybody on this call to also think about your own personal experiences. I know was my driver. So I always, if you told me no, I was going to prove to you that I could do it. So I've always been a risk taker. That's why even today at my age, I'm also focused on some of those speculative areas that others see as volatile and risky. And I say, actually, no, even if it's $5,000 or $1,000, I'll put it in, and I'm going to learn in everything from my failure to my success. So, again, as we continue to talk about what we're doing, it's really, where are you and what do you attribute to where you are? And then one of the biggest questions I have for myself and for many of you on this call is, how many gigs do we have left in us? So even though, where I am today is much of a product of my surroundings and where I chose to focus my efforts, it's where am I right now and how longer do I really want to continue to work? And what can I afford to do with my knowledge, my expertise, and some of the monies that I have, instead of waiting to actually be in a position where I can't even have like I'm forced to start to take action. So, I want to make sure, right? So I tell my story. This is where I am today at my age, with a 27-year-old child who also is, of course, working for me and some of my future, and it's paying off. But do I want to continue to work? Absolutely not. So what can I do in the now to help get me to a point where I can have both the active and passive income work for me?
Great story and a wonderful lead, I think, to actually show the spreadsheet. Beth, can we just quickly show the spreadsheet? Yeah. So the where are you today is kind of the first ask from the group, that if we try to think about how do we move to passive income? I wonder if there's a way to shrink this. And I'll share the story behind the I'll share the story behind the spreadsheet, which, like, when I was hearing Maria, ties into, yeah, you can just leave it like that. It's fine. And we can go through it. So my personal aha moment was, I've been working in tech and saving and paying bills. And the only thing we did, which was a bit long-term, was buy a home that we were living in and was building my 401ks. And 2 years ago, I asked that question that Maria just asked, which was, and I asked it to my husband, I said, so how many gigs do we have left in us? Like, how long are we going to go in this rat race? And when do we do a shift to a little bit of passive income? And I had in my head, I wanted to start a company, and I knew it required investments. So the first stage was building this spreadsheet that basically was as simple as it gets, but it's ironic how sometimes it's hard to actually go through this exercise. And the spreadsheet, if we were to, I wonder if there's a way to kind of like shrink it. It just has 4 areas that need to be filled by each of you, which is.
Is that smaller? Too small?
I'm 48. Yeah. I mean, I can put my glasses on, but yeah, no, this is okay. We'll go from here. Perfect.
Yeah, because it's either that way or this way. Okay.
Yeah, this a second. So we'll read it out, but this is an exercise that we're kind of asking, I think, almost everyone that starts the conversation about where am I today? I've been told to kind of work, save, heads down. I'm lifting my head. How does the future look? I'm in this shift to thinking about how does this financial future look like? And the idea is to outline just what do you have? It's an exercise that should theoretically be simple. The hardest one is the long-term and speculative sort of, I'm trying to remember if there's also like, there's one more line underneath the long-term. Beth, if you scroll down a little. So let's walk through it, just kind of what this is.
I see what you're saying.
We see our immediate amount of cash that it's available. This is all your checking, savings, CDs, very easily accessible money. We then look at brokerages, also very accessible money, but still invested, where a little bit of timing does make sense if you needed to access it. So this is your gold. Usually crypto is easily accessible, but also is very volatile. So timing matters here a little bit. Then listing out all the 401ks, so long-term investments that you could access with a penalty, but you don't want to because of the tax benefits. So all these should be fairly easy and simple. And then come the a little bit harder categories of listing out what are things that are going to be, that are assets that are hard to extract. So if it's property, it takes probably 6 months or so to decide to sell a property, collectibles, jewelry, things like that. And then comes the whole speculative side of things. Like, did you invest in startups? Did you give loans that you maybe will get back or maybe not? Are you anticipating inheritance? Things like that. And I'll just tell you that in my spreadsheet, the bottom speculation did not go into a calculation. Like it's in a column that is outside the math of the sum. So this took me, it wasn't, this should take a few minutes to do. Like, you don't have to have actual numbers, ballpark, but there is a moment there that if you start asking yourself, well, I actually don't know where things are, is an important aha moment, because that's a self-reflection moment of like, well, I actually don't know where an investment or a 401k that floated away from a job that I did 20 years ago, or I know I have some property, but I'm not sure what's it worth, or things like that. So there is a self-reflection moment here to make sure that you're able to look at everything you own. And we can stop the share so we can continue.
And how often, because think about this, how often should you reflect on that? Because it's not where you just, sit down, go through it, and once fill it out. I think there's if it's a monthly review.
I look at mine almost daily. I've become that obsessed.
I was kind of baiting you, but yeah.
But I'll tell you, so I used to run these workshops, and we would start this exercise of kind of like, just run what you, put down everything you own, an exercise with yourself. And I started the talk with this thing of like, I wake up in the morning and I pull up my phone and I look at texts and email, and then I look at my bank and my brokerage. And there was silence in the room. It's a bunch of 30-year-olds, by the way, I used to run these workshops with. And they would ask, why do you need to look at your bank every day? And why do you need to look at your brokerage? And I know it is sort of maybe I was born off, I don't know. But this is a part of the full ownership to some degree. You don't have to be looking at your bank and your brokerages every day, but owning your finances require you to know what these finances are in whatever method that feels right to everyone here. So we do this exercise, and then something really amazing kind of happens. You actually know your net worth. And it's a simple exercise. It shouldn't require that much work, but there is a moment there where you kind of say, okay, this is what I have to date. And I'll tell you that the way to go from there is let's, I know I'm 48, we're talking about retirement and financial freedom nonstop with our peers and friends and everything. And one thing that really, really helps in that discussion is knowing the 4% rule. Who here knows what the 4% rule is? Raise your hand.
Only because speaking.
Okay. So this is the most thought organizing rule I've ever had in my life, because we've been talking about retirement forever. And then someone said, this is years ago, 4% rule is very simple. So it's something that was devised by some financial guy in 1995. And it's been contested, but it's a rule of thumb. So take it to that effect, is that if you know that, let me put it that way, for every $40,000 that you think you will need in retirement. So let's pretend I'm a family. Let's just say we need $100,000 to live comfortably a year before taxes. It means that for every $40,000, I need $1 million in net assets. And the idea, the way the guy devised it is he basically said, what's your nest egg? What do you need to have in your nest egg for you to be able to pull money and have the nest egg not get depleted over 30 years? And this is a rule of thumb that is super helpful in kind of getting a sense of like, okay, how much do I need to, let's say, we need $100,000. If I say to my husband, oh, I can bring in 50 easily every year, then we need to make sure that once we retire, we have enough in that nest egg to allow for 50K annually, which is about, let's say, $1.5 million. So I'll pause here for kind of question and comments also from Maria.
And one of the other things that we also need to remember is inflation. So, right, because I have an economics degree. I have focused on strategy for the majority of my career. And the way that I look at markets, it's like every year it repeats itself. We've seen inflation go up, down, bullish markets, down markets. But right now it's as volatile as I have ever seen it. So interesting, even with some of the comments about real estate and where we don't want to invest in necessarily real estate. One of the things that I would challenge you to do is look around the country. You see where there's booming areas that you might not have even considered. I'll even take like Idaho, where I know where I think it was the median income in Boise, Idaho, like 10 years ago or 15 years ago was around 40,000. And today it's like blowing up. And where real estate is increasing, I think it was the figure I saw last was 20% over the last 2 years in the pricing. So there are things that we can do where we can also, like even on that real estate piece, but you have to also be comfortable with sitting and waiting and watching, which is the exercise that you're talking about, Baat. Whereas if we're constantly in the know, then at least we know when we can pull the trigger on some of these things versus then getting hit in the face with, oh my God, I wish I would have moved whatever it was that I needed to move a year ago, right?
So, yeah, no, that's true. I was sitting in a financial session probably a year or so with Capital Group. And when they discussed the 4% rule, that's a very sombering discussion. I was showing Jim last night, I watched one of the housewives or something, and they said, what's this guy's net worth? He has this big house in New Jersey and all this stuff. His net worth was 3 million. And I was like, well, how does he do all this with 3 million? He must be very leveraged, right? But it's just very interesting to me that how far your money may or may not go. And I don't think people think about it over the long haul with everybody living longer and all that. And you want to be comfortable. And with pensions going away and all that stuff, how much you have to really focus on your long-term now. Not to be Susie Downer.
Yeah, and I'll just add to that because I've been dealing with this with my husband's family, with my own family, with long-term care insurance and assisted living. Assisted living is about $12,000 a month. Times 12 is $144 a year, and that's just for if you are in a place. That doesn't include if you needed help in your home or something else happens to you. So there's kind of that thing that we're forced to look at beyond just having the cushy retirement is who is going to take care of us and what is the cost of that.
Yeah, the 100,000 example I gave was downplayed for an example. I don't think it's a realistic number, and exactly based on what you're saying. Sorry, Diana, go ahead.
Right. No. And again, just piggybacking on what Sandy said with the long-term care, Barbara Oberman, who's a member of C-Suite, she set me up with a long-term care policy. It's not cheap, and you have to keep paying it until you use it. So that's something to think about there too.
I had heard they were very expensive. We don't have them.
And the policies are not very good anymore, whereas before they covered a lot. Now the coverage is less per day, and they may still have that inflation buffer, but it's still, once inflation goes up, these costs are only going to rise, and the long-term care may not necessarily cover that.
Yes, and there's a period of time you have to go on your own, savings before you can even kick into it. So it's a lot to think about.
Yeah. So this is why I'm trying to simplify, I think, the thinking. And then what we wanted to do next is sort of both take a look, touch on a few of the topics that were shared earlier of most interest, but then break you into groups. It looks like we lost a couple of people, so maybe into a couple of groups, or maybe we can do this as one group and have a conversation of, if we know where we are, and we are able to say how many more gigs we have in you. I love that phrase. Then what are the tools that we can take along with us in terms of investments to get us to where we want to go? So this is the kind of conversation. I'll tell you that personally, things that have really shifted for me is I'm looking a lot more at dividend stock. I'm looking a lot more at preferred stock, dividend stocks. I started looking a lot at bonds. There's a huge discussion now on the internet around I bonds because of the interest rate. Is everyone familiar with the I bonds? So these are bonds that are tied into the interest rate. And so the current treasury bonds, you can only buy like $10,000 worth a year. So there's not big promise there. But they're now, I think, getting 7% return, and anticipate every 6 months they adjust the interest rate. So they're planning to probably adjust it in May, and you'll move up to 9%. So this is a vehicle that is worth looking as you move from this, tech stock, high growth, just building a pile of cash, to how do I literally create technically passive income? Who was it who said that real estate wasn't as beneficial as they thought? I think, was it Rosemary?
Yes, I think it was.
Yeah. So I'll tell you personally, I'm also kind of wondering, how do you move from getting calls at night because the toilet's broken to making that real passive income? These are the things that are kind of coming to mind.
Yeah, so I have a friend that has made a ton of money in real estate. She and another woman had bought 6-unit apartments all around La Cañada, Pasadena area or whatever. And she swears by that as income. She's in her 70s now, but they have tenants that have been there 20, 30 years.
And I'm also, I wonder if they have a management person.
Yep, they manage it themselves.
They do. So
Yeah.
whenever, interesting.
Yeah, they just hire people to come in and do the fixing, but her husband's handy and he does a lot of the stuff too, so. But anyways, yeah.
I think one of the biggest things that you and I also discussed is how do we diversify? Because even when you're investing in markets, there is volatility in markets. And, you know, I'm also an example of that, where I lost everything in 2008. And I had my money with a broker where I wasn't even paying attention to where that money was. And it was, you know, family, so family friends, and it was actually in Madoff's fund. And Madoff, as we all know, was a Ponzi scheme. And next thing you know, all of that hard-earned money was just basically nowhere, right? So I had to reinvest, and basically relook at the strategy for my life. So I learned a very hard, fast rule that diversification is everything. So whether it's in, you know, these insurance vehicles, I actually enjoy startups because I'm able to take the things that I know as an executive and some of the things that I've done and invest in companies that intuitively I realize or I think are going to do well. And if they have an exit, then you get your payout, right? So you can do anything from taking physical money and investing in that startup to actually being an advisor and getting, you know, your stock grants that way through just advisory for a day, a month, or a day a week. And, you know, some other ways and other means to take what it is that we're comfortable with and invest it that way. So, you know, where do we want to be in 10 years? What is it that we feel we need to do? Take that spreadsheet bot that you put together, right? Figure it out, and then say, what are we comfortable with? And where can we shift our focus so we can start to truly have that independence and confidence for our future to get there in that 10 years.
Yeah, one of the things that came up in our group by Karen was that talking about financial advisors, she said that she had 2 or is used to. Karen, you'll have to maybe clarify that. But that's the thing, as women, we aren't brought up with the same financial finesse, and you know, across the board, of course, some women are so financially savvy, but in general, it's men who are kind of groomed to be the financial, you know, be more financially savvy, you know what I mean? So as women, then how do we decide on these financial advisors? How do we pick one that's really beneficial for us rather than just pushing products that they're going to make money from?
Karen, do you want to share a bit from your experience? Because I'll just preempt you and say that the new generation, there's a lot of articles coming out, are less excited about using financial advisors.
Oh, really? That's interesting.
For 2 reasons. 1, there's a lot more tools to manage things yourself. And 2, this whole model of AUM is really not meeting this new generation in the right place. So AUM is assets under management. And basically the financial advisor makes a percentage from whatever it is you have, if you lose or you win. And so there's a lot of conversation right now about how financial advisors are just not able to get new clientele from the new generation. And there's a lot of changes in their models trying to adjust to that. But Karen, I'm super curious for your experience.
Well, we went with one. I was doing all of my own, and I think I lost a lot of money because I really was just going on intuition, quite frankly, and not watching the market. And when I watched the market, it made me do all the wrong things. So I decided that I did need I needed an advisor. So we went to one group in California that we told them, you know, we want safety. We're at a place now where we really do want safety. I'm a big risk taker, and you need to hold me down. And then the second one is we went to a fee-based. we decided, no, we don't want you to get money from what you tell us to invest in. If our investments do well based on what you tell us, then we'll come back to you for another fee consultation type thing. But so that's where we're at right now, because I really should not be doing that.
Can I add
Power of
something to that?
knowing that. Yeah. My
Can I
husband
add
and I
something to
use
that?
a financial advisor, and it was really because Jim, he's so smart with the finances. He's a PhD engineer, blah, blah, blah. But he didn't want to take the time to create the modeling tool to model, if we do this, this happens. If we do this, this happens. If we spread it, so we paid a flat fee, and this guy lets us use the modeling tool. And then we have taken a little bit of a chunk and given it to him, and that pays that flat fee for his percent of the fund. But we will never give him all of our crap, right? We're just giving him a little piece to see how he does. That's it.
Latoya,
Can
you
I
came
add
up.
some perspective?
Yeah.
Yeah.
So I am a certified financial planner, and I'm happy to hear the talk about the fees, because when I first started in the industry, it was all about charging the asset under management, and I wanted to work with women. And so that didn't work with like the big banks, because a lot of women were either transitioning either out of a marriage or changing companies. They didn't have a lot of assets. So if I worked with the bigger firms, I couldn't help anybody if they had less than $500,000. And so I decided to start my own firm independently. So my company, I do that on my own. And the way my fees work, I got away from asset under management, and I started charging flat fees or financial planning fees. And then I hate to call them millennials because they're getting older now, they're in their 30s.
Yeah.
I do subscription-based planning. So they're used to that. It's on a monthly basis. And then I map out all of their financial planning topics and areas that we're going to discuss throughout the year. But yeah, the asset under management model, I see where they got it from. It's not good for everyone. And then if you're working for someone, you really ignore a set of people that really need your help.
That's amazing. Do you have a website? I'm curious to go look up.
I do. It's latoyamaddox.com.
Got it.
Yeah,
Cool.
because Latoya, I do know a lot of my nieces and nephews are using financial planners. And it's because they really don't know what they're doing and they don't want money. So, but they all have families now. So it'll be interesting to see how their financial planner works.
What's interesting too is there are several, and feel free to chime in. You and I have spent a lot of time around the startup world, and I've also spent a lot of time in New York City. It's interesting because there are tech platforms. So you talk about the modeling, understanding what we need to do, where we have to focus our monies, and these tech platforms. And I know we heard about Robinhood and some of the garbage that went on there, but several tech startups are actually building that model for us, so we could basically say, okay, this is what I like, this is what I don't like, here's my money, now show me how it can work for me. And it'll model that out for you before you even hit the button go and do. And then of course you're getting your reports, and there is no broker. It's just all done by AI and machine learning. So I don't know if you want to chime in about that.
I'll tell you that what we're trying to build is actually, and this actually leads to a question I had to the group as well. So this is a savvy group, as much like I've been having so many conversations with women, a lot of them younger, basically saying kind of what you were saying, Sandy, around not being groomed to understand this world, and then deciding, this is not for me. What we're trying to crack is, how do I take you to so that you understand it is for you, because there is nothing else out there. No one else will, especially if you chose a career that is not in Wall Street, is not in tech, that doesn't have a 401k necessarily with it. So first, this group is savvier than I think I expected. That being said, it feels like a lot of the platforms that are being created today are very much trading platforms. There's a lot of encouragement to just go trade stocks individually, crypto, NFTs. And I know we should probably spend a few minutes on crypto and NFTs. I'm happy to share what I want. I'm heavily invested in crypto, but not in NFTs yet. It feels like the platforms missed, you come from the Schwab and the Fidelities that are very, to some degree, not financial expert friendly. So if you come without the background and you're like, okay, I need to start somewhere, these platforms are very, require a lot of language and jargon that you have to spend time learning. Then there is the Robin Hood of the worlds, just go trade stocks. We don't care. Do you sink, you swim. It's not our problem. I don't know if you guys even heard the story about the 20-year-old who committed suicide due to.
No, that's horrible.
Because he woke up one day and saw, he traded options and then he saw a negative of 700,000 and he thought he owed that money and killed himself. So it feels like we missed something along the way. And in the way, women are either expected to become financial experts or completely disengage. And this is where there's a room there to create platforms that are simple. At the end of the day, this investing thing is not rocket science. Like, it's not as crazy as it's made to, as they've made it become. So I'm curious about those thoughts. And then if you guys want to spend a little bit of time on crypto or any of the other investment vehicles that were brought up.
Yeah, so it's interesting, of course, and I don't know about LaToya, but my financial advisor won't give us any input on crypto because it's not approved and, whatever. Blah, blah, blah.
I think
Can I tell you why?
I think it's more about they're not comfortable with it, so they won't give you any input on it. That's what I think it boils down to more so.
Yeah, the way I look at it, and I've kind of looked at it more as just knowledge-based versus that I actually want to invest in there. I kind of feel like it's like multi-level marketing, that those people who got in at the very beginning really kind of control the market or making the most amount of money. If you buy into it later, it's kind of like buying a stock when it's at the highest. It's like,
Yeah.
I don't feel like it's manageable when you come in kind of new and green. I think it's too volatile. And that's just
when
my
it's newer,
opinion.
you didn't want to do it, and nobody would want to do it because it's too new, right?
So I'll tell you two stories about how I see cryptos. The first one, it's a crappy story. So at Intuit, I was in the innovation group, and in 2013, we were exploring. We did a whole session on crypto, and I was the one who was designated to go open a Coinbase account. And when you opened back then in 2013, a Coinbase account, you would get $5, sort of, they would deposit $5 in crypto for you, which was 0.01. And today I actually never bought crypto in 2013, and I regret it until today, or Bitcoin back then. And those $5 are a reminder for me to remember, because they're worth like $600 now, those $5 or whatever. I don't know. Is it today 40 something? So they're worth 400 something. And I don't know how many X that is, but it's a lot. But the reality is that if I step back from, what you're talking about, Sandy, it's the, is it the height of the market or not? I step back and I look at what the world is going through. So we're going into a global world, right? No matter how many wars we will have and how many COVID and how many pullbacks each country is going to say, no, I'm declaring my borders. We're going into a world that the real problems will require a global system, right? To solve, to solve the real problems of the world, like how we use AI, how do we use bioengineering, how do we use data, is the only way to govern this thing is going to be in a global way. And this global world requires a global system, both monetarily, a way to move things around, and also sort of regulatorily. And this is where NFT comes into play, right? We need a way to know if until today a bank said, yes, I vouch that this person moved money to this person, we need a global system to solve for that.
And also, I want to add one that allows for privacy and security of your data. and any
Right.
data that it takes in. Okay. So keep going.
Yeah, I agree. That's really important.
So with that in mind, and with and if you think about what NFT is as a definition, it's basically, as someone once said, NFT is the truth. We are living in a world where we don't know anymore what's true, right? We don't know if a post we see is true, if information we see is true, because information comes from so many worlds. And what blockchain has created is a way to have one ledger or one notebook where all the real truth things that happen in the world, all the transactions are being recorded, and it's open to anyone, so anyone can see it. It's still private because you don't see the name, but there is enough ability to confirm that this transaction really happened. So we're moving away from banks, we're moving away from all the different mechanisms that each country put in its place for itself, to a global system that will allow to see transactions happening, that will allow to see, let's talk about NFT, you know, who owns a piece of, and it's not really art per se, who owns a piece of digital information?
The digital asset. Yeah.
Asset.
But see, I think I think that technology behind it is brilliant. And I think that is the wave of the future. But I think the question is that where you want to put your money? Because are you really going to see any returns, or is it a Ponzi scheme? You know, is it going to end up being like that? So yes, you're right. Having the non-fungible tokens and the digital asset part that is secure is really great. But it's like, in terms of making money, investing money, like, where is that going to be?
I'm gonna put it this way. I'm gonna just real quickly. I was sitting in a room at Harvard iLab, and I've been a mentor for several startups out of there. And there was a gentleman, we were talking about the digital universe and what is going on. This was a discussion about AR and VR and what we're, you know, our virtual reality versus the reality, the physical reality of where you are today. And I actually made a statement, and I said, I still don't understand all of it, but I do know that my daughter and her friends spend 99.9% of their life online. Their reality is in the virtual world, not in the physical. And you have to think of it in those terms. What you and I feel secure with, you know, being able to actually physically touch something, see something, isn't their world. And we are being driven by that. So NFTs, what happens with blockchain and cryptocurrency, frankly, is actually positioning our children for a very strong foundation to continue to exist, because, and you don't hear about this, your banks, your hospitals are having, they have hacks constantly with all of the data that are housed in those physical facilities. So we don't all understand it to the granularity that we need to, but it's not going away. And it's been part of the conversation, at least my conversation, for the last 10 years. This is not, you know, some of, you know, the blockchain and what we're seeing has actually been in the works even before that. So, you know, you fast forward to today.
Yeah,
right?
I agree completely with you.
So back to you, Sandy, just one point. There is a difference between crypto, which is the coins that we don't know what's going to be the coin of du jour, like the coin that at the end will land to be the global coin. We don't know. One of the gazillion coins that are out there are going to be, and I agree with you, chasing that one is very risky. That being said, the blockchain, which is the infrastructure on which this entire global system is being built, is going to happen. It's being invested in by all the, and you know, I never bought Bitcoin, but I do own a lot of Ethereum, which is both a coin and a blockchain infrastructure. This is the company that is building the infrastructure. And so I personally do invest in that. That being said, I'm also not chasing the right monkey. So for those who are less familiar with NFT, we are now experiencing in the last 6 months, I think, a crazy market, which I think has topped already, if I understand, of there's an understanding that we need to start registering all of our digital assets in this world, like all, you created a photo, how do you show that it's yours? And you use blockchain to do that. So there's now a lot of markets creating assets, meaning like art or digital art, and selling it, and brokerages are starting to form. There's for those of you who are curious, I think the big one is OpenSea for NFTs.
Yeah, that's the number one for NFT. Yeah, that marketplace.
So that still feels to me like chasing the right art that will be worth the most is just like, say, chasing Bitcoin versus Ethereum versus Solana versus all of those. But to invest in the infrastructure, to me, feels like, 100 years ago, they decided industrial revolution, let's invest in trains and train tracks everywhere. To invest in the blockchain, for me, feels like you're investing in something that eventually is going to happen. So that's the difference.
Yeah, that's the safer side of it. To me, like NFTs is if you're looking for something for a shorter term investment where you can get, a quicker payout and you're willing to spend the time to follow it. But
when you say NFTs are kind of like the collectible market these days, except that it's just digital instead of stamps and coins and pieces of art, like real pieces of artwork you'd find in a museum. I mean, that's where that difference is. So that to me is just parallel. It's like the new way that we're going to collect things.
Yeah. Yep. But to Baat's point, I agree 100%. That blockchain is being used for everything from ways to move away from, of course, the use of credit cards, and to possibly use DNA on the blockchain, because your DNA is the only thing tied to you that somebody can't replicate.
And but that's the technology side, though. That's not really the investment side, like, buying cryptocurrency so that you have an income when you're retired. To me, that there's like a disconnect there versus this is how all business and financial things will be transacted. So that's the transaction versus the actual finance part and making money in it. That's where I'm not clear about.
But it's more, so thinking of it like this: you're investing in the infrastructure, not on the things that are happening on top of that infrastructure. You can invest in the actual infrastructure that all of these new innovative companies are coming out with and building. That one example that I just gave you, there are several, even in healthcare, that are using it to digitize your DNA. They're using the blockchain infrastructure. So
how do you start to invest in there? Because you would need somebody to guide you who really knows what they're doing. So again, is that a financial advisor? Is that just getting your feet wet with a little bit at a time and trying to learn?
I would get your feet wet with Ethereum. Yeah. Ethereum is the company that is both, it's got a coin and it's building the infrastructure itself. And I would start very small, but just like once you open an account, either with Binance or Bitcoin, Coinbase, or I don't know who else is out there today selling Ethereum. But here's the thing: it's kind of like, when the mining, like when we started mining minerals out of the world, it wasn't clear that gold would be like, why gold? Why not, give me, I'm not a chemistry major. Give me a chemical. Silver, whatever. Like, why go? Like, it's random, right? It's about how, how much is accessible. Yeah, these are the good ones, but there's probably a gazillion set of minerals that never made it to the top list of gold, silver, and diamonds, right?
Yeah.
But the idea is to invest in a mining company that has, is building infrastructure to go and mine, and it doesn't matter what they mine, right? So this is the digital equivalent. I personally haven't, purchased any art because I feel the same as you, like it's, who knows where it's going to go. But I am looking, like I would invest in OpenSea itself, the first company that displays digital art and allows you to buy NFT. So one click below of infrastructure for me feels, once I see that they're established themselves as the company that is going to probably be creating this infrastructure, It feels like it's investing in the next Google or the next, infrastructure-based company.
Yeah, I think it's so important for us women to have these conversations and to learn about these things because, again, it's not the big boy network where they're involved and know it. So women, we have to educate each other and come from a place that it's okay to not know anything and to be explained and have it explained to you.
Yeah.
Absolutely.
So I went out there, and it said for Ethereum, it was trading at 3,000 US dollars for one share.
Yeah, for a coin.
Yeah.
But look at I mean, it fluctuates significantly. It's there's no no one has the magic ball, right? To say,
Right. No, I know.
yeah.
I mean, it's like when I bought my Amazon, I jumped in at, I think it was 1,600 a share. And now it's up, 34, 36, right? And now they're getting ready to do their stock split. So, or NVIDIA, when I bought my NVIDIA, same thing, So anyways, it's you have to be willing to kind of play and accept that may do what it's going to do, right?
And you have to be in the conversations. I think that's the key. I remember that I used to invest in stocks from a young age and never spoke about it to my friends. And then as I was climbing up corporate ladder, I would be in these rooms and all of a sudden people are talking about stocks. And I'm like, wait, where was I? I never, you hear these, so this type of conversation, if we can encourage each of us to actually have open conversations with our friends, kind of like what Sandy's saying, with the vulnerability of not knowing everything, but just have these conversations. It drives me nuts that, I have we're a group of 4 girlfriends from when I was 7. And we're on chats all the time. And we did not talk about money for 40 years until I started Nia. And I was like, well, how come we never talk about money? So I think the key is to talk about money and put away all these, the things that we were brought up with. Because at the end, to me, money is a medium. It's a medium for freedom. It's a medium for decision making. It's a medium for to be independent. And, I'm looking at the time, and the last sentence I want to say is that I feel like as women, we have gone a long way in our revolution of getting our independence, but until we get our financial independence, we're not going to really it's not equal, it's free. It's not about equality, it's about freedom. And so that's to me like the last sentence.
Can you just give one more recommendation on getting a financial advisor or somebody that isn't necessarily tied to a bank, but that could help you explore all these, the newer, more aggressive ways of investing?
I'll let LaToya answer that. I'm getting my financial advisor certification as we speak. So LaToya, you're more equipped to answer that one. You're on mute.
Before she comes in, one of the things that I use is Motley Fool. That's a publication that I learned about actually 20 years ago, and I continued and it'll give you some guidance. You can read about these different things, and it'll have backlinks to other educational pieces and whatnot. So that's one of the biggest pieces that I read. And then Fidelity
Yahoo Finance. Yeah, Yahoo Finance in there too gives a lot of great information.
Yep. And then Fidelity and Vanguard, by the way, do a lot of their IRA investing for crypto with Ethereum. So one of the other things that I think about too is those two companies are, to me, more on the less risk adverse. So if they're voting Ethereum as the best crypto for IRA, best crypto IRA, then that's also one of the things that helps with the decision process.
LaToya, do you want to chime in? No, you're still on mute. Oh,
you're driving too, so be careful.
Oh,
can we unmute her?
It says that she's not on mute, so I don't know.
Okay, I just can't hear her. Okay, Toya, just send us or send send us what you want. We'll connect you with Sandy. Okay. Or Sandy, you can reach out to
You
Latoya.
can go to her website too. It was
Right. It's
latoyamatics.com.
Latoyamatics, right.
Yeah. Okay.
Right.
Sounds good. Well, we thoroughly
All right.
want to thank Maria and Baat for coming and giving this briefing and presentation to us and discussion. It was just invaluable.
Yeah.
It was totally invaluable. It makes me think that maybe we should do like a quarterly finance kind of thing, but that's a whole other thing. Right?
Have a checkup. Yeah.
check
Yeah,
out.
just like a little group within C-suite who wants to talk about finance, like a little sub thing, but I don't have the bandwidth for that. If Maria or Bot want to run that, let us know. Okay,
Happy to open you to our
Good.
women. Okay.
right,
So take
exactly.
care. Thank you.
Have a magical
Nice
day.
meeting
Bye,
you.
everybody. Thank you for
Everybody.
coming.
Bye.